Welcome to the Market Alert for Tuesday, the 12th of September 2017. So yesterday in the pound, the market was just fairly quiet, then traded sideways and then broke out as the US dollar came on board and moved lower. And then, of course, the US dollar recovered as we see the pound move lower. So a very tight trading range for yesterday, all eyes still on what Irma had done in Florida. But more on that in just a moment. In the daily pound, you can see that we had the market just move lower, trading back to the 131.63 area where the market's found support on the overnight market there. In the news, what have we got for today? The UK's got PPI out, and CPI and RPI. These are due out at 9:30. It will be interesting to see what happens here. We've got an increase in CPI forecast, PPI increase, and also RPI. So let's see if these come to fruition. Meanwhile, out in the US, we've got the JOLTS job opening. That's out at 3 p.m. But no other news to move the markets once again. And speaking of the Dow, let's bring this up and have a look. Yesterday, we saw the market moving sharply higher from the off. As I mentioned in yesterday's market alert, the devastation wasn't as bad as they were expecting or forecast in Florida. It was still bad, but not on the scale that they were expecting. So this is good news for both the insurance companies, which moved higher yesterday, even though you've got massive payouts coming. But don't worry about that at the moment. Let's just pump the market higher because we want it higher. So we see the market going sideways for a bit after, and then we have another bit of a sideways move. And then we get a potential buy signal. And when this one appears, you can look back and think, well, nothing else has actually moved lower. It continues to move higher. We're above the 22,000 level, and then the market makes its way up to the 22,050 level. And then, of course, once you've got all of this out of the way, we know the market's going to go sideways in the evening. Objective achieved, market up, then we don't need to worry about the evening part of the session, which is what I wrote about last week. So I didn't need to send out a note yesterday to say that you could expect the same, because we know that that is the pattern at the moment. Meanwhile, in the Dow, very interesting picture here. You got the market up yesterday sharply, but look at the volume. Absolutely nothing. This market's rigged. We know it's rigged. The market's got to take out the 22,074, and we are heading, ladies and gentlemen, drum roll, we are heading back to the all-time highs. Now there's a new hurricane out in the Atlantic forming at the moment, Jose, which is due to make landfall, if the models are correct, this coming Monday. If that is the case, and we get the same reaction as we've got yesterday, I mean, it comes to something now when you have to move the markets higher on the basis that the hurricane wasn't as bad as you thought, or the damage from it wasn't as bad as was forecast, in order to move the markets back to the highs. But the all-time high looks like it's on the cards. It's back in the gun sight and is likely to be taken out. And also to back that up is the implied volatility. And shock, horror, yes, implied volatility 797, down massively from 9.29 on Friday. Incredible, really, what we're seeing going on here. So we're heading back down to these levels that I didn't think we would get back down to. I always said we wouldn't get back down to here, but who knows what the goal of the Federal Reserve is at this time. But certainly a lot of VIX selling yesterday, pushing the volatility down, the risk out of the way, hurricanes out of the way for the time being, or Irma. And now it's a case of changing focus to Jose. And if that is actually, the models on that one are showing it going up the east coast of America to New York and Washington, D.C. at the moment. But again, they're only models. So an interesting weekend coming up again weather-wise for the US. Gosh, it's turning into a weather report. This is, I don't know, a market report. But again, it just goes to show you what they will use now in order to keep this illusion alive, this massive Ponzi scheme that they've got and been running for the last 8 years. Plenty of articles on Zero Hedge today. I'm not going to go through them, but Japan now owns 75% of, the Japanese Central Bank, Bank of Japan, owns 75% of the ETFs over there, and the credit card Q2 now is greater than 2008. So again, everything's just pointing towards that when this breaks, it will break big style. But who knows the date and time? None of us do. It depends how long they want to keep this Ponzi scheme alive, and they're doing a very good job of doing that at the moment and keeping the market moving to the upside. Right, that'll do it for this one. Reporting, it's Tuesday, it could be fairly quiet today because obviously everything's factored in from the weekend from yesterday, so be careful from the open. Again, be able to judge from the pre-market session, then take a view. Right, that'll do it from me. As ever, thanks for watching. See you in the next one.